Guys, welcome back to the Independent Investor Channel. My name is Ryan. You know, when you're looking to enter into the stock market, the most confusing thing for new investors or folks that have been investing 20 years plus is always, am I buying a stock at the right time? And it's so difficult to answer that question in a one-liner. It really is. There's a lot of different factors that go into what you need to look at on the financial side of the house, on the technical side of the house, the fundamentals of a company you need to look at, and also to have really that sixth sense, which I find all the time. You know, if you've got experience in the stock market, you can really separate the gray matter into black and white, and that's really what I hope to do for you guys. I had a comment come through the channel just here recently asking me to dive a little bit deeper into some of those companies that don't get a lot of attention. And I agree. I agree with that wholeheartedly. I feel all the time that YouTube is offering opinions on stocks that are really the most in the limelight. And I think that's giving an unfair representation of opportunity out there. Now, I'll have you guys know I recently took, just today actually, position in Marathon Petroleum. And I'm going to let you guys know and give you the insight on this one company. All right. This is going to be something that I try to do a little bit more going forward as we approach the 10,000 subscriber level and beyond. We're going to start to generate a discussion on specific companies that don't get a lot of attention on YouTube and also on the mainstream media. There's a lot of really, really good companies out there to look at, all right? A lot of companies that don't get looked at are the ones that typically will outperform, while the ones that get all the attention are looking to adjust back. And I just felt like Marathon Petroleum, it's a company that I've been watching for quite some time. I've owned Marathon Oil in the past and made really, really good money. But Marathon Petroleum spun off of Marathon Oil back in 2011. Now, this company has roots back before the 1900s, all right? So when I get into this, you guys need to understand I've already looked over the company's financials. I've looked at its technicals, found a few things that really you've got to dig pretty deep to find why it is you would justify taking a position in this company. And all too often I find that, you know, when we're coming out with our top 3 stock picks for November, or we're coming out with stocks that are hot to buy right now, we're just offering those as opinions, honestly. But I'm going to dive a little bit deeper on Marathon Petroleum, really, and trying to address what I felt was a really, really sincere comment on trying to understand a little bit more about what we look at. And I'm going to be putting excerpts within this video that come from both the balance sheet and the income statement. And the financials look, obviously, we're going to look at some charting. The chart on Marathon Petroleum really tells the secret, okay, on what we need to be looking at. All right, now let me just set the stage a little bit here. Marathon Petroleum is about a $50 billion market cap company, all right? It is both a growth and income company. What that means, it's in the large cap energy sector, all right? You're going to get paid a nice healthy dividend at 2.6%, about $1.85 a share. And it is anticipated to rise into the future at 10% a clip per year. They've been growing the dividend significantly. And in my review of Marathon Petroleum, that's one of their 2 goals, is to grow the dividend and buy stock back in this fine company. We're looking at right now, we've got a price to earnings ratio at 9.7%, less than 10 times 2019 forward earnings. For you guys that don't know what PE is, guys, you need to kind of understand what we're looking at. PE helps you understand how expensive a stock is at any given time, all right? And what I've noticed in my review of Marathon Petro is the PE has come down from close to 18 times to below 10 here, which is actually a steal. Now, the price to earnings and growth year-over-year ratio is a favorable where we want it, and typically you want that below a factor of 1, all right? Right now, the PEGI ratio in Marathon Petro is at 0.9 times, all right? So it's attractive on those metrics, but to just kind of set the stage here on what we're looking at with Marathon Petroleum, we're talking about kind of a 3-tier business here. And what I was able to extrapolate from the data is that you're almost buying kind of a diversified name across really three segments of their business. The first being their flagship, and that's 50% of their business, which is refining. And for you guys that don't know, crude product just comes right out of the ground as raw crude. And these companies are taking this and they're refining it down into what can be usable, whether it be gasoline, distillates, jet fuel, all the usable fuels that we take, right? The raw product that comes out of the ground has to be refined through, and all the impurities have to be taken out of it so it can be utilized. And once they take that refined product and sell it on the open market, they're selling that at a premium, all right? Now, Marathon Petroleum is really one of the best in the business. They've got 16 refineries across the U.S. Now, what has helped them expand this footprint, this is really the backbone of the company, guys. This is 50% of their operating revenue in Marathon Petro, all right? But what has helped them really kind of stamp out their footprint from East Coast to West Coast and from Gulf to Midwest is this acquisition of Endeavor. They just paid $35 billion to expand their exposure, especially on the West Coast from what I was looking at. And also, whenever there's the Permian Basin that's mentioned in this company allowing itself to pull basically the crude stock out of the ground and use their pipeline system through their midstream businesses and push that to the refineries, it gives them a competitive advantage, right? You think about them taking this product off of their own company, sending it through a pipeline, typically that's managed by a limited partnership, and pushing it to these refineries. Now, the refineries, ironic enough, through this acquisition has become more strategically more strategic in that they have now West Coast capability. And that was the big thing with the Endeavor piece, is to give themselves access to that crude stock and basically just increase this refining capability that they've got, all right? So very exciting. I don't see a lot changing with the refining business. It was 97% capacity on the last earnings report. They missed estimates by 1 penny, guys, so they were basically in line. I believe it was $1.70, and they were calling for $1.71, so a very, very strong quarter. When I got into the financials of MPC, I was looking actually, the balance sheet, the quarterly balance sheet is something that I enjoy looking at more so than the annuals, all right? The annual's a little bit more of an average through year over year, but when you really want to dissect what's going on, you can see a little bit better trending if you look at the quarterly balance sheet. And a couple things that I looked at with Marathon Petroleum when I looked at the balance sheet is from September of last year to September of this year, their revenues doubled. All right, something that just jumped right out at me. There was strong cash flows, and if you look at how the cash flow has improved, it really kind of gives a tell, and it's an inverse relationship to what the stock has done, especially over the last couple months, and we'll kind of get into that. So sales growth up 20% on the income statement, so the financials were really strong. Sitting on about $4 to $5 billion of revenue per quarter. So really, really strong. This company is making accelerated cash flows in a time where Brent crude oil has actually really come off of the high. There's been a lot of geopolitical pressure with what Saudi Arabia is going to do, what OPEC is going to do, as opposed to cutting back on global supply out there, all right? But the reason why this is so attractive here, even though this is their baseline or their backbone of their business, and it is very, very lucrative, all right, Brent has come off 20% of its high. And if you're going to take a stab here buying Marathon Petroleum when Brent is basically buying into weakness, is what I did today with my 40 share purchase of Marathon Petroleum, I'm really betting on this right here improving over time. All right. So the next piece of their business here, I've already talked about it a little bit, is their midstream. That's how they transport their raw product or their feedstock, basically, that comes out of their ground. They've got to transfer it to the refiner. And that's where this piece comes in. And Marathon Petroleum is an operator of over 10,800 miles of pipeline. So really, really interesting. Now, this is 35% of their revenues, all right? So basically think of the infrastructure that exists here where they're charging folks to move this product through their pipeline and just generating free cash flow for them. That's really a lot of the reason why there's so much value in this company, and the value has really been recognized, especially over the last couple months as the stock price has come down, tethered to the price of crude oil, all right? So 10,800 miles of pipeline, and this is going to be an area of focus here in their midstream business as Marathon Petroleum is going to start to really exploit this part of their business. And the final piece that a lot of people miss a lot, and if you're out there taking a road trip all the time and you're driving, you know, our freeways out there, you are absolutely noticing the speedway businesses, and this is 15% of their sales is in the retail side of the house. Now, this is probably going to be the biggest segment of attention for the board of directors for Marathon Petroleum. They're going to try to take this speedway business, they're going to try to reinvest back into this exposure. Now, 2,700 stores over 22 states, they've got these speedways. And this is one of those things that's not really tied to this piece up here, but when you're talking about retail sales and offering gasoline sales through retail, the volatility in that line of business is actually fairly steady. It's really a good business, and they want to try to increase and improve upon this exposure here. Now, they're number 2 actually, and you think, wow, it's hard to imagine with all the Shell stations and Exxons. The speedways are actually number 2 out there. So something to kind of look at when they're taking and investing in this. You know, owning this stock really allows you to have exposure to each of these tiers of business. And I think it's really, really exciting. And a couple things that I noted in review of these and trying to provide you guys transparency. And keep in mind, guys, this type of analysis is something that I go through on every stock that I invest in, all right? Now, I thought I would just try to open the playbook a little bit. I'm going to provide the excerpts from the balance sheet and the income statement in this particular video, but I want you guys to look into this. If you guys have got comments, I want you to add the discussion. That's why I'm going to be coming out with these videos that do a little bit more thorough review on each of these stocks. And typically when I come to a decision whether or not I'm going to buy or I'm not going to buy a stock, it's basically at the end of this type of analysis. And you know, I look at all analysis out there. If there's a piece of information out there that I can get my hands on, I don't discredit any piece of information. Conversely, I don't look at one piece of information and just base my decision based on that one piece of information. You have to kind of collectively take everything into account, all right? Where it is on the chart, where it is with the financials, you know, in any alibis that are disclosed. And one particular alibi that I found is this distillate fuel here with regard to Marathon Petroleum's refining and offering distillate fuel to the shipping industry. Now, the International Maritime Organization, which is typically referred to as the IMO, in 2020 has a huge proposal on the docket to change the shipping laws so that shippers of goods across the world have to comply. Instead of burning heavy fuel oil, which has a sulfur content of 3.5%, they're going to require that to be burned down at a sulfur content of 0.5%, which is basically a cleaner fuel. It's a distillate fuel, and Marathon Oil actually stands, or Marathon Petroleum stands to benefit from that higher cost premium fuel to the shipping industry. Guys, if it's your first time tuning into the Independent Investor channel, I highly ask you to subscribe to the channel, man. Share the message without anybody out there looking to get more information on the stock market. We're looking to provide transparency on a landscape that's typically not discussed very often, and I think we could all become better stewards of looking at specific companies and actually questioning whether or not you want to buy a company or not. This is the type of process that you go through. And as I mentioned at the top of this, you have to do your own research, certainly. But getting yourself some experience in the stock market is never going to help, and you cannot continue to put off gaining that experience in the stock market. Eventually, you're going to have to start to gain some experience for yourself, and that'll kind of help you evolve in your sixth sense a little bit, in separating a little bit on what companies are worth going through this analysis for. So guys, leave your comments at the bottom. If you guys see things in the balance sheet or the income statement on Marathon Petro, certainly love to hear your guys' comments on it. Know that I've actually put my money where my mouth is. We took a 40 share position in the stock today. That was my decision. I only go and share this type of analysis with you guys and showing you, what type of fundamentals I look at before I take a position in a stock. Guys, thank you so much for tuning into this video, and good luck in your investment future.